Yeah.
And previously in my career as a banker, and now particularly as a venture capitalist, and look at the book and say, that's why you do this. This is why structure is important. When we looked at chapters 1 and a little bit of chapters 2, we spoke about the three paths that a business can take.
Mm-hmm.
And the one is growth by default. The one is basically the growth that unravels. And then disciplined value building. What do you call
Mm-hmm.
those three paths, Gilliam? Would you like to very briefly, in sort of 3 minutes, just recap on that concept for us? Because they are the foundation of the book. And I think what I'd like you to do, if you don't mind, is cover those three paths and then tell us how the book is structured to lead someone through the path that they should be walking, which is hopefully a disciplined value building.
Yeah. No, thanks, Michael, and thanks for having me. And I think the last conversation was very helpful and useful. So my background, I've worked both in the development finance space where, I was a deal maker, eventually became, chief investment officer for a fund that was focusing on small to medium-sized businesses and also entrepreneurship. Then I also worked in more, let's call it sophisticated environments in corporate finance and investment banking space, and then also private equity. And I think what's common amongst those is that ultimately it's about the entrepreneur. So if you look at the SMEs that I'm speaking about, again, you're backing the entrepreneur. And then also, with private equity, typically, when you do a private equity deal, the private equity investors, they back the entrepreneur. And typically, what would happen often is that if a private equity investor would buy into a business, they'd make an assessment of the management, which oftentimes in the medium-sized companies sector involves a founder. So many of these businesses are founder-led. And that's where my thinking came from. I realized that a lot of focus is on the SME space, getting startups, helping. I think even if you look at South Africa with a large unemployment issue, you find many young people wanting to get into entrepreneurship and maybe not always understanding how difficult it might be. But be that as it may, a lot of focus, incubators, funding packages, and the likes. What I didn't see as I was doing the research on this book and thinking about, my journey as a coach, I realized not a lot of focus is on this mid-market, the medium-sized companies and how you transition from having graduated from let's say a small business to a medium-sized company, but how do you harness that value, that growth into value? And I think it's important. I think my thesis is that not all growth leads to a valuable business. And growth is not linear. In other words, it doesn't just continue to grow. And so then I reflected on some of my experiences both in the corporate environment, whether DFI or private equity, and then also as a consultant, right? So if one looks at these three models, they're all reference to experiences that I've had in my career. So if you look at the undisciplined growth, the idea there was a company that has been successful. They're no longer a small business per se. They have some substance, but not necessarily profitable, or there's no predictable profitability. 1 year profits, next year losses, some loss-making divisions. And also, as I mentioned in the book, the business does not generate cash. So for me, one of the key metrics of a successful business is cash generation, because that gives you options. The next one, which I call growth that unravels, my point of reference there are more these larger businesses that I've also either worked in or advised on. And what I found there is that the problem, still linked to the founder, might be a little bit more sophisticated. It becomes more about strategy and strategic choices. In other words, not all the shareholders might have the same vision of the future, which essentially then means the business plateaus, right? And if one looks at anything, if you're not growing, you're going backwards. And so that's typically what happens. The business reaches a stage where it's profitable, it's successful, but it's stagnating and eventually taken over by competition or starts to fragment. Now, the third one, which I called, value building growth, the idea is that those entrepreneurs that built it either from scratch, or it could be a business that's already been around for generations, and now you got maybe second generation leadership. But the idea there is that it doesn't happen by chance. There's a blueprint that these sectors, the third category, actually introduces, and it takes it in disciplines, whether it's strategy, whether it is governance disciplines, and so on, that makes these businesses able to grow sustainably and monetize the growth. In other words, it's something that provides them dividend flows, or they can sell to a private equity investor or to a trade buyer. And that is my vision with the book, is to plant the seed with the reader to say, look, yes, you've done well. You've no longer a small business per se, perhaps, in the medium size, company sector. But what is the next stage of growth, and how do you grow sustainably? And how do you also grow in a manner that allows you to have an asset and not just be trapped in a business, in a job, as it were.